Boop, boop. All right. Good morning. It is 6:32 a.m. on Wall Street, about 3 hours before the open of the markets. Welcome to QuantBox Live, where we get our global macro on and uncover the best fundamental investment opportunities across global markets. My name is Wayne McDonald. I am the founder of QuantBox.co. I'm actually a real economist with a real degree in economics, which is pretty good for a YouTube guru, anyways. But I developed QuantBox because I've always wanted to know why money is moving around the world. Always want to know, like, why did the euro dollar just move? Well, it comes down to fundamental analysis of macroeconomic trends, and that's exactly what QuantBox does, and it automates it. We drill into the fundamentals. We track the smart money. I think we'll take a look at today's smart money, and you can conduct research. So anyways, if you're watching this on YouTube, you're watching a video that's many hours late, why don't you actually give it a try? Visit quantbox.co. The trial is $8 for a week. And within that, you also get a macroeconomics course and a statistical analysis training course. There are many additional tools on the professional subscription. And if you add it up, it's actually cheaper to go with the professional, then you get more stuff. Anyways, let me get going. Welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Log into the database. So on Friday, we got the new commitment of traders report. We'll bring it up on QuantBox. A couple of things to look at. Okay, oil still attracting buyers. S&P 500, look at this one. Okay, it's still nearly 60% short, but the thing is, there are significantly more bulls week over week. So it's still bearish, but money started moving long. So that's kind of interesting. Okay, and dollar's still leaning on dollar strength. Okay, but the thing is, who is buying? Is it foreigners and all that kind of stuff? Be interesting to see, if any of these flows change in the near term. A lot of contracts short on gold this week. Still 2/3 long, but the money is flowing out of gold, which is actually very seasonal. If you bring up gold on the seasonality chart, you'll notice that it typically is this time of year. Look at this. Less bulls and less bears on Aussie. Euro, not anyone, nobody's shorting euro, just nobody wants to own it anymore. They're not selling it, but they don't want to own it either. So anyways, that's kind of interesting. You're like, well, it's only 23,000 contracts. Yeah, you're right. It's only 10% of the entire market. Yeah, you're right. And I'd like to point out, this is before the ECB told us that they're not going to raise interest rates anymore. So next week, we'll probably see even bigger exodus. Anyways, let's get on with it. Let's go to the scatter plot. Friday was quadruple witching. If it can expire, it did expire on Friday. So it'll be interesting to see what happens today. We had a big red day on the S&P 500. The thing is that people getting out of old contracts, out of old positions, and then they want to roll into a new position. So, like, they got out on Friday. Do they get back in on Monday? I'm hoping so. The big event, of course, I have to say this. There's a Fed meeting, right? That Fed meeting, but the Fed meeting in of itself is a risk event. So risk averse would exit the market before the event. So that's kind of like that's the other thing that happened on Friday. People are like, "Mm." So anyway, so between now and Wednesday afternoon, we probably won't have a lot of inflows. But I am very interested in seeing what direction the market wants to go before we get there. Then we have our FOMC meeting. I don't even care about the FOMC meeting. They're not going to raise interest rates, nor are they going to really tell us something that we don't know already. But I care about the SEP, the Summary of Economic Projections. So I can't wait to do that. Then Thursday, I believe we have Bank of Japan and Bank of England. Right? So anywho, Wednesday, Thursday is going to be important. Yields are still going up here on the 10-year T note. Remember, not long ago, maybe a month and a half ago, it was 3.99. So they're going up. The bond market's falling. Hmm. So if you bought a bond a month ago, you're losing money. If you had to sell it right now, you'd get less money. Not cool, right? So that is bearish. And I think the biggest problem is the government here. Oh, yeah, there's going to be a shutdown. Did you? By the way, the US government's going to shut down. Yeah. Apparently, they're going to join the United Auto Workers. The government's going to unionize. Anyways, bad joke. But yeah, the US government is going to shut down. Great. That's going to be great. So we'll see how that impacts things. Oil still bullish. We had that nice little pullback, and it's all right. It worked okay. Gold futures are at 1948. Still, we've been there for a while. I'm wondering if again I'm having problems of that number updating. I'll double check. S&P 500. Yeah, we had that drop. Okay. Yeah, we had the drop, but again, if you were hedged, it probably isn't a big deal. And then Bitcoin, I do have going up on my chart. I have it planned out for going up. Just want to see how my hedge position did. I didn't even look. Oh, yeah. So the stock market fell, but actually made money. Cool. Not much, but uh, cool. Looking at the risk gauges, these used to be all risk off. Then they were all neutral as of yesterday. So a month ago, they were all risk off. Then, like Thursday, they were mixed. Now there's a little bit of risk off again. I'm okay with that fluctuation. I understand that we're going into this Fed meeting and you're not likely to pile money in right before a risk event. I mean, that makes sense, right? I mean, we want to make sense of what we do. New money is not going to come in before a risk event. New money will come in after the risk event. Okay. And by the way, this is the third week of September. So I'm hoping that this is the week where suddenly these all go to risk on. We'll see. It's a big hope. I understand. A lot of it is based on seasonality. So we're starting in a new week. What happened last week? Well, last week, Bitcoin was up over 4%. And oil was up over 4%. Those were the biggest winners by far. Japanese stock market, British stock market up. So how about the United States? Yields were up, which is not good. This green is bad. Gold is up a bit, great. On the downside, CAD strong, Aussie strong. CAD strong, Aussie strong. Last week I did a video on Euro Aussie short. Okay. Notice that these are only like over the course of a week, only 1.5%, where these are up 4%. Big week for Bitcoin, big week for oil. Okay. CAD strong, CAD strong, Aussie strong, Aussie strong, Aussie strong. Okay. So that was the theme of last week. Commodities. Okay. Dollar still expected to be strong across the board, right? Pound dollar down, euro dollar down, Aussie dollar down, Kiwi dollar down, Dow down. Okay. USD's up, USD up, oil up, USD CAD up. This is on top of a strong CAD. S&P 500 still technically bearish. All right. Holy moly. And retail still heavily short Swiss franc. Institutional still very heavily long oil, gold, and euro. But like I was showing you, this 70-30 is maybe changing. And I would expect this to fall, 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 fall. So euro will fall down the list. And so that would make me less and less and less bullish on euro. So that's the big thing I care about this week. That's it. Okay. Yes, we have Bank of England, but oh my goodness, these summary, the SCP is so important. And then way out here, we have yet another central bank. So again, yen will probably move this week, pound will probably move this week, dollar will probably move this week. A lot of other stuff going on too. Like some of these things are important, right? Like British retail sales. Yep, we care about that for sure. There's Japanese inflation levels. Yep. If you care about yield curve control, that'll be important. Existing home sales matter. It's going to be a terrible number. Nobody wants an old house at 9%. You might as well get a new house at 9%. 9% being the mortgage. I don't know what the mortgage is now, but it's like 7. Denise is like Swiss National Bank as well. Yeah, but sort of a lesser of a player when compared to all of this stuff. That might be the distraction. Now, here's sort of the sleeper RBA meeting minutes worthy of reading for sure. For sure. That comes out tonight. So, a pretty decent week, but it's the summary of economic projections. And if any mistakes are going to be made by the market, it'd be that they trade the interest rate decision and they trade the press conference, but they don't even understand that this is what matters. What percentage of the market actually reads the summary of economic projections? I don't know, probably not many, but it's what matters. You should have very good idea. Like, for example, when you look at the Fed Watch tool, it's nearly 100% chance the Fed's not going to raise interest rates. Well, we knew that. We knew that like 6 months ago. like no joke. At least 6 months ago, we knew they were not going to raise tomorrow. So what are they going to say here? I don't think they're going to spell it out that they're done, that there's one more and then they're done. There's no need for them to say that. They want to keep their optionality. So anyways, but I do care about their dot plot. That's in the summary of economic projections. And that's what matters. So while traders are going to trade the press conference and the interest rate decision, the investors, the smart money, are going to be looking at the dot plots. So, anyways, that's what we're going to do. What's going on? Okay, Bitcoin up and a mixed bag with the stock market's down, 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 down. Okay, down by a lot, down by not so much. Yield's still flat, not for something, but flat going up. And this one, woo, that surprises me though. All right, looking at the technical side, these are the daily trends, the longer term trends. Dollar has now made it pretty gosh darn close to what I had put as a projected high. So as we inch in closer and closer to 106, okay. I mean, you could argue we're there now. Like these are guesstimates, right? You can argue that we're there now. I was just highlighting 106. Okay. So it would be interesting if it rolls over in the next 7 trading days. Yen still generally weak. Now you can see it feels like it's strong because it hasn't fallen for several weeks. But I wouldn't call that up just yet. So again, sometimes we get frustrated because we're trading hourly charts and 15-minute charts, and we get frustrated because it ain't moving. If you looked at weekly charts, it might be a different point of view. Okay, Swiss fairly strong, sitting on old support. Okay, money could be moving from Europe to Switzerland. Okay, and remember, Switzerland doesn't want a strong currency. So they probably won't raise interest rates. So we'll have to track this flow of money. Okay, once we get below this line, definitely bearish. Now, when the ECB told us they're probably done raising interest rates, the euro dropped to 107, and I believe it's sat there ever since. So we'll take a look at that. Might be something to watch for. That might maintain dollar strength. Money might leave Europe and go to dollar. Now, it sucks for me because I want a weaker dollar, but if Europeans decide to buy the S&P 500 with their euros, convert those euros into dollars, convert those dollars into SPX, well, by all means, go ahead and do it. If you want to buy some, if you want to convert your euros to dollar and then convert your dollar into a 10-year T-note, drop those yields for me, yeah, by all means, go ahead. But we have to track that flow of capital out of Europe and the UK. So over the last several, 2 weeks, we've had a good run for commodity currencies. So I'm going to move pound and Aussie. Okay, and so we had this run here in Aussie. It's becoming a bit overbought. Upward move And Kiwi, okay, but the trends have been down. CAD, okay, it kind of double bottomed and is trying to head up. Okay. Much different scenario though. Maybe I'm not measuring the same amount of time. Well, that's as far back as I could go. Much different situation than like this. Wait, CAD is mostly up. And CAD, I'm going farther back though, maybe. How far back did I go for CAD? June last year, right? 2021, 2020, June of 2020. Yeah, it's about the same there. Notice like we're right on that standard deviation now. Interesting. Peak to valley. Okay, interesting. I want to watch Kitty Cat. Maybe it's or Aussie. I mean, maybe Aussie does have some legs. The idea is in high inflation, maybe commodities. You put your money toward commodities, tangible assets, land. Like when interest rates were dirt cheap and we were expecting interest rates to rise, I said, buy as much real estate as you can. Land being a real estate. So you buy it when money's cheap, and then what happens? Then inflation kicks in, and they jack up interest rates. Borrowing money is now expensive, but the value of the land is going up like crazy because people need that real place to park their money. So, anyways, take a look at that euro, and we had a big move. Let me get this on a real time frame. There we go. We got that big move. And then the counter into this area. This is where I actually had it marked. And we haven't done anything since. So what was this? Thursday, Friday, Monday. Okay. I would assume trend continues down. I really have to back out to get this. And there's the bottom. That's why we stopped falling here. And one would stink. The trend continues down. You're like, Wayne, why? Because of technicals? Isn't that a double bottom line? All right. The central bank has told us they can't raise interest rates anymore because they're killing their economy. Oh yeah, that's down. That's fundamental. That's not technical. Now I might be wrong. Okay, then maybe it goes all the way up. Well, I'm not wrong yet using technical analysis. Right? So the idea is sell. Oops, didn't want that. The idea here is sell it off that moving average. So let's go back into it. And what I'm looking to do, and I was looking to do it on Friday as well, just never really occurred. You want to look at the lowest low. Okay. And the idea is somewhere in there is the sell. The second idea is you sell off the moving average. Okay. The future moving average. So you have to project this. And we're just kind of not there yet. Okay. That's the direction, but it's also going to move down over time, assuming it's not moving up. If it's going to do this, you have to move this down a little bit. So one way to cheat, excuse me, is you use the price action pivot point. So, anyways, there might be a sell there coming. If you are a bear and you believe the ECB is done raising interest rates, that's how you thread that together. Now, you might want to do something else. Euro Swissy, Euro Aussie. I guess we can follow up on Euro Aussie because we covered that on Friday to allow it to rally up so you can sell it. Because you don't sell low, you sell high. And so here's a 4 hour and very, very similar. Let's do it this way. Very similar. Whatever your technique, maybe you like to use that, which is price action. Maybe you like to use the moving average, which is another form of trending. Maybe you prefer to use Fibonacci. These are all techniques, right? They're not, which one's right? The one you do. Okay, those are three different methods. We can add another one, insert indicators. I'll do biased pivot points. So we can go biased pivots, bearish bias, and midpoint's true. So we go here and go to a smaller time frame because they're daily pivots. And there's today's sell zone. So if you're using price action, okay, this is the line that you're looking for. If you're using Fibonacci, this is the area you're looking for. If you're using higher time frame moving averages, this is, I think, the area. And if you're using daily pivots, yeah, we're there now. So it seems to me somewhere around here you would sell. Now, I think where amateur traders get confused is they try to do all of them. I just want you to do one of them. I just want you to make a decision. Are you going to sell it or not? Okay. So sell it off to 21. Oh, but my 5-minute MACD doesn't line up with my 1 hour stochastics, which doesn't match my daily ADX. Okay. That sounds confusing to me. So you could just sell it at the 21. How about that? I like the 4 hour 21 because then I can be short, not daily, but for a week. So that's the other thing we can do here. I can go back to my bias pivots and say, give me the weekly trade plan. Okay. That's the nice thing about algorithms. They never complain. You ever use ChatGPT? It's amazing. Do it again. Okay. Do it again, but give me some more of this and that and the other thing. Okay, I'll do the whole thing over again. Oh, cut out that part here. Don't even discuss that. Okay, I'll redo everything, but I won't put that in. You're like, it never gets upset. Anyways, lovely to your mum. So what does this say? Okay, well, let's get rid of this, which is the Fibonacci. So we'll get rid of Fibonacci. And Leonardo Fibonacci. Here's your role reversal price action. We can get rid of that. I'm not going to get rid of the moving average. So what does that say? The first opportunity is to sell it at 66,000. The next opportunity is to sell it at 66.77. Wait. And this is why you don't have to know all these different indicators. That is the same as selling it up to 21. And this is the same as selling it off the roll reversal. You have moving average and price action. It's the same thing. And you know that that's right in the middle of the fib area, Fibonacci. So they're all telling you the same thing. That's why you don't need five things. And right? And I don't want you to look at five different indicators on five different time frames trying to get them to all line up. They're not going to line up. And statistically they won't, but when they do, you won't see it. You'll be sleeping. So instead, you have to look at the high time frame strategically and then drop into a small time frame and trade tactically. Someone should write a book about that. Oh, wait, I did. Yeah, in 2008. So anyway, so there's the strategy. Sell it off of 166, take it down to the bearish weekly pivot down here. It's 62.67. And now you can start looking for price action and oscillators and all those things that you love so much on the smaller time frame, like a 15-minute chart. So for example, maybe today it goes like this, then you sell the next rally and you can short, and the target was 63 basically, and we're at 66. So maybe you get 65 and a half, you're in there, a couple hundred pips, easy peasy lemon squeezy, if it falls. That's the thing. You don't know if it's going to fall. So you're going to need to make a decision fundamentally. So, yeah, I think we should just leave it there. It's going to be a big week. Don't forget the RBA meeting minutes. Okay, those are some good reads. I read 2 books this weekend. Amazing, huh? Just knock them out. Boom. So we can read 2 pages from the RBA. Then we got the big Fed, of course. Wowzer. Followed by the Bank of England and the Bank of Japan on Thursday. Holy smokes. So I'm really looking forward to next week. Really am. Like, I've been looking forward to next week all year. I'm not even joking. So, yeah, hopefully nothing weird happens this week. I mean, look, if the government shuts down, that might screw up all my nicely laid out plans. I'm not sure what the government does all day, but for them to stop doing it can't be good. Huh? Yeah. I mean, if they stop working, all kinds of weird things can happen. But I suppose weird things can happen anyways. Did you hear that the I think it was the Air Force, somebody lost an airplane with the F-35. They're like, they lost it. So the pilot had to eject. And so they go get the pilot and they're like, what happened? He's like, it don't work. And they're like, okay, well, we'll go figure it out. And they couldn't find where the plane crashed. They couldn't find the plane. So the US military is looking for their F-35. I would look on the ground. I would start there. Yeah. Start low. But anyways. Oh, is that right? They should send out Civil Air Patrol. Yeah, for sure. So anyways, yeah, so anyways, do you know if there well that so the conspiracy theory guys, Mark, say there's something going on. But is there a reward? Like, what do you do if you find an F-35 in your backyard? Do you get to keep it? Is it your private property? Is there like A $200 reward. I don't know what a $35 million airplane is worth, or it's probably a $50 million airplane. I don't know what it's worth when it hits the ground. But you probably get 200 bucks for it at the pick and pull. Yeah. So, anyways, I hope they find it. So, imagine if the government shut down, how bad things would get. Yeah, even worse than that. So, peace on earth. May the pips be with you. May your profits be above average. Cheers.